the gold to silver ratio. This video is kind of going to show my brief, kind of amateurish analysis of this, which I had done several years ago, and I want to show you two coins I've shown you before in the videos. This one here, right? You see how this one is all shiny and in plastic, and this one here, right? It's got tarnish, right? So it's kind of like, you know, the silver to really stay shiny, you got to put it in the plastic or something. Whereas the gold to stay shiny, right? It just stays shiny all on its own, you know. So, and before I get into the gold silver ratio, you know, I've got people people follow you, right? So the SCHITT report is following, and there's some channels on YouTube that are like, they don't like Peter Schiff, and they have a lot of videos about saying like he was wrong and so forth. And what I think what happened is Peter Schiff and others in the last few years made some very bold predictions about things like precious metals and the stock market. And some of those bold predictions were extremely wrong. And there are people who will invest based upon these predictions. So there are people out there who lost money based upon these predictions, and it appears they are angry at some of these pundits, so they create tribute hate channels. So I think as people who have been watching me for a while know, I worked on the Schiff for Senate campaign. I was in an ideological kind of frame of mind. I really wanted to have like kind of some real change and all that. So I worked on the campaign briefly, and I got to see the inner workings of Schiff's campaign. And while I have a lot of stories, when it comes to the public arena and a previous employer, it's not really good to air your dirty laundry. Because what you're telling future employers is that you're going to trash them, right? So if you're on YouTube and you're trashing a previous employer, the future employers are like, okay, we're not hiring that guy because he's probably going to trash us in the future. That works for other things too, like relationships. If you trash someone publicly, you're announcing to future relationships that you're gonna get, they're going to trash you also. So the whole public laundry thing is kind of dangerous, actually, to others and you in certain ways. So, getting back to the gold to silver ratio, my original analysis, I was like, well, how does gold compare against silver based upon what's happened in the economy? And of course, there is no perfect correlation. There is no absolute correlation for these ratios out there. There's no perfect correlation to ratios like gold to silver and other things, because if there was, it'd be so simple for everybody to press a button and get rich. Uh-oh, the gold to silver ratio follows these rules. Oh, boop, rich. No, don't work that way. It doesn't work that way. But there are some correlations. So what I noticed is I said, okay, when does gold do better than silver, and when does silver do better than gold? So I looked at, you know, going back like on the charts on the internet, what I could find, going back as far as the data find, and I looked for the recessions and depressions. So what I found, for the most part, is that during economic downturns, gold does better than silver. Now that doesn't mean that they're both going up or they're both going down. It means that the relationship. So when there's a real economic downturn, for the most part, gold does better than silver. The industrial component for silver is larger than the industrial component for gold. Gold has a larger monetary aspect than silver. So therefore, when there's a downturn in the economy, there's more metal put on, there's more industrial metal put in the market or less being consumed. However, one big exception was like the early 80s. There's an what happened was there was this concern of a currency crisis, or there's this Hunt Brothers phenomenon that was happening, and that so my analysis was, wait a second, you know, when the currency's stable during economic downturns, gold outperforms silver. They both might go down, but gold does better than silver. Now, in the boom times, when there's more stuff being made and consumed, and silver has a more industrial portion, then silver does better. And of course, it's not a perfect correlation. You're not guaranteed to make money on this at all. So What happened a few years ago is there were rumors of currency crisis. If you've seen all the videos and alternative media, the dollar crisis, right? And silver did better than gold, even though from part of that time there wasn't really, the economy hadn't been, well, it depends on what metrics you use, but you know what I'm saying, right? So what's happening right now is if there really is an economic recovery, then silver should outperform gold, unless there's other factors. For example, there's other factors, but from that generic perspective, that was kind of my secret sauce, right? And it's not so secret because you can look up the whole historic gold-to-silver ratio, you can look up the recessions, depressions, and so forth. But that's kind of what I was looking at. So, but of course, if the gold-to-silver ratio it's over 60, so that either tells me that the economy really hasn't improved, or it tells me maybe that silver was overbought by the speculation the last few years, and this overbought silver is now causing things like you know, too many mines to open, and now they're closing. Wow, it's got suddenly got sunny. Look at that! Wow. Okay, and so forth. Or there's extra investors who have extra silver, or I don't know, other factors. So in the marketplace, there's never one factor that moves price. The price of something has many, many factors. And you probably cannot figure out what all these factors are, because the people who buy and sell are not all publicly saying what the reasons. And even if they were publicly saying their reasons, they probably weren't saying all the reasons. The people are buying and selling stuff for many reasons, and you know, there's probably never just one thing going on with buying and selling. Of course, when you have the charts going on, people who are trading and speculating, when they see a trend either up or down, they hop on that wagon and they can exacerbate the moves. So you get these people who are purely speculators, purely, of course, I guess you could argue everybody's purely a speculator, but I'm talking about the trend-following speculators, the chartists who, they don't care what it is, they just want to get in and make the money. And that's kind of like how they see things like stocks, real estate, precious metals, even bitcoins, is they don't care what the story is. Like, for example, with precious metals, a lot of the stories kept people from taking profits when silver was almost 50, because taking profits in silver, that was anti-story. That was very anti-story. So then for a lot of the hard money people, when Bitcoin was on the chart saying this is a great buy, the story is no, it's too abstract. And of course the traders don't care. Or there's more than that. A lot of the people who have hard assets, the whole idea of the Bitcoin kind of goes against their grain and so forth. But really, it's the people. So a story will stop you from taking profits at a good time, and then another story will stop you from buying at the right time. So you got to watch out for these stories. But of course, life is a big story. I mean, we live stories. I mean, your whole life is a story. Everything you believe is a story, you know. Politics is a story. Everything's a story, right? So, this is all right. Thanks for watching.